Coming off one of the worst consumer sentiment reports in recent history, our first guest this morning says that a report shows a recession may have already arrived.
It's the only way to combat price growth in food and energy is to have massive demand destruction, which is the scenario for ugly recession.
Inflation has been a hot topic in the news lately. Prices are rising, and consumer confidence is shockingly low. And a lot of other things are also happening altogether. Everyone is really worried about the future of the economy. Now, amid all this, Alden gave her take on the current inflation crisis in the U.S., which has reached its highest level in over 40 years, and consumer confidence, which has reached its lowest. In today's video, I'm going to cover Lyn Alden's update on the macro environment. So stay tuned, as Alden warns that she did not see a short-term end to inflation, instead predicting that wealthy, developed nations would continue with policies that will cause recession. Now, to always stay updated with the world, economy, and the market, go ahead and hit that subscribe icon. Let's hear what Lyn has to say on the inflationary crisis.
So essentially, we're having an inflationary crisis, and it's hitting developed markets for the first time in decades. I mean, developing countries go through this regularly, at least many of them do. And now it's hitting developed countries across the board, some harder than others, especially Europe, less so Japan, but really across the board. And because that's mainly because commodities are a global market, and that's a big driver of what's causing this, as well as supply chains. And, whereas last year we were in this pure inflationary phase, now we're kind of in the central bank counterattack phase, where they kept saying it was transitory. They kept saying, don't worry about it. This will be, there's base effects and things like that. And some of the base effects were real, but they were sugarcoating the type of inflation that we were actually getting and probably about to get. And because they weren't acknowledging how much new currency supply was created in a short period of time compared to real world constraints around commodities and logistics and things like that. And so now we've added a Russian war to the mix, right? So that further makes it challenging to, optimize commodities where they need to be. And then we also have very draconian Chinese lockdowns, very large percentage of the population. And that's the manufacturing hub of the world and the shipping hub of the world. And so that kind of gums up the supply chain problems. And so we both have limitations in the real world side while also having a lot of currency having been created. And so now we're seeing the inflation roll through the system.
In recent months, the inflationary crisis is touching the clouds, and they have already been happening regularly in developing countries. But Lyn points out that this is the first time in decades that inflation has started to impact developed economies. Now, what's causing it? Alden continued, saying that excess money printing in a short period of time and supply chain issues are contributing to this economic downturn. Alden predicted that inflation would remain high for a prolonged period of time. She also discusses the central bank's role in inflation and how they're working to combat it. Don't forget to hit that bell icon for more videos like this. You can also hit that big thumbs up icon down there if you enjoyed the video. Let's get back to it.
So now central banks have their credibility threatened, where they said it was transitory. It's far higher and less transitory than they kind of sold the idea would be. And so now they're in the phase where they're trying to tighten policy, but the whole point is that, unlike, say, the 70s, there's so much debt in the system that trying to tighten policy is kind of this temporary thing where they want to act like they can stabilize this whole thing. We can get back to positive real rates. We can totally normalize this. But the problem is that the only way for the central bank to push back on inflation is to reduce demand. They can't print oil. They can't print copper. They can't print ships. They can't, just magically create new pipelines and get all that stuff where it needs to be. And so they say, okay, there's a supply side constraint. We have high inflation. If we reduce demand, we can take the edge off prices. But what is a reduction in demand? It's a recession.
Global debt is at an all-time high, unlike the 70s. Unprecedented money printing during the last global financial crisis was followed by more extreme money printing during the pandemic. Most countries are now bloated with debt. According to her, the only way the government can think of for the economy to return to normal is to reduce the demand.
So, humans are happier and more flourishing when you have to spend a very little amount of your money on, the necessities of life, and you can spend more on travel and luxuries and optionality. But when those necessities increase in cost for one reason or another, that is a common trigger for a recession. Another one is that just the central banks and the fiscal force are trying to push back on inflation. As I described, they can't just create more oil fields But so what they can try to do is reduce demand for things. So they can kind of, in their vision, the best is to have like a very mild recession. But it's, they call it a soft landing.
How do they do that though?
Well, historically they don't, right? It's one of those things, they always want a soft landing and then they don't get a soft landing, and then they get a hard landing and then they have to reverse course. It's very unusual. It's rather unusual to get a soft landing. I mean, technically, for example, in the 2000s, after the dot-com bubble, in the US at least, you had a relatively soft recession. It wasn't a particularly severe one, but that was a very different cause. And so there are recessions that are worse than others. So they're not delusional in thinking that, not everything is like a giant crisis, but, it's one of those things where, like, analyst Luke Groman would say, we no longer have a dial, we have like an off and on switch, and they still think it's a dial. But because there's so much debt in the system, that dial starts to become like a switch. It's you're either growing or you're kind of collapsing, because there's just so much debt that if you're not growing, you're falling apart pretty quick.
Recently, she also shared a meme on Twitter commenting on the recent economic scenario. Inflation is rising, resulting in higher interest rate basis. Supply chain issues are increasing, but we can't increase supply, so we need to reduce demand. Now what that means? It means economies are precariously balanced, and recession is close at hand. According to Lyn, it's like an on and off switch, that if you are not growing, you are falling apart quickly and pretty badly. A cost of living crisis is hitting the most vulnerable in all corners of the globe, especially the US. The cost of necessities like housing, healthcare, food, energy, fuel, everything have continued to rise lately. This has made it difficult for many people to make ends meet and has led to a decline in overall happiness. She shared a chart showing that the best sentiment was in 2000, and the worst sentiment is now. She also explains how they will centrally drive a reduction in demand. Let's hear her out.
So one thing that they can do is they can tighten monetary policy to make it harder to get a loan.
Oh, okay.
So they can slow down housing activity, and that's a big factor for a lot of economies. And then especially like junk debt has harder getting financing. And then they can also combine that with the fiscal side, can stop doing stimulus, things like that. They could raise taxes.
She recently tweeted, as the U.S. moves towards demand destruction, to contain inflation, China may start to come out of its own demand destruction. Well, the scenario of the market doesn't look too good. We're definitely in very uncertain times. What assets could weather these storms? Can we get a soft landing in recession? What does the future of the U.S. economy look like? Let me know your thoughts in the comments below, and if you enjoyed the video, be sure to like and share. Also subscribe to my channel for more videos like this. I'll see you all in my next video. Adios.